Brilliant idea coming. Since we're building cash payments into the tax code for lower income levels, why do we need 124 means testing agencies with their 700,000 employees distributing goodies based on income levels? Means testing programs cost the federal and state governments over $900 billion a year. Since these programs cover 45 million living in poverty, they cost $20,000 per person. Now, how can they be living in poverty if we're spending that much money on them? Why should we continue to filter money through expensive bureaucracies when we'll have a mechanism to pay them directly? The 1025 plan's core idea is that we incorporate a safety net into the tax code that brings everyone up to the poverty line. The federal government will no longer discriminate between individuals. It is critical that these payments not be viewed as welfare, but as part of a new tax code, since everyone receives these payments regardless of income levels. While some may object to distribution of cash to all citizens, we will be replacing a broken tax code and eliminate a huge bureaucracy for a large annual savings. And we eliminate the possibility of politicians manipulating the system for personal or political gain. Existing commitments to those on Social Security, Medicare, and Medicaid, and commitments to government employees, including the military, will be met through a buyout that will be described on a future video. Obviously, there will be special cases that need more than poverty line support. State and local governments will handle marginal individual needs with help from private charities. However, the bulk of support will come through automatic federal tax distributions. This also gets rid of the malinvestments in the current means-tested programs. Currently, a single-parent family of 3 earning no income receives approximately $35,000 worth of support. As the mother earns additional income, support from these programs is withdrawn. She hits a series of benefit-created walls. As she passes $18,000 a year, she loses Medicaid support for herself, worth about $6,000, all in one shot. At higher income, she loses food stamps, rental support, and the children's medical support. Her path out of poverty has many government-created roadblocks. Under the 1025 plan, families will be supported up to the poverty line, yet they will keep 75% of all income earned. Previous barriers against escaping poverty will fall away. This safety net for citizens will also reduce the need for minimum wage laws and allow for reduction in unemployment and disability payments, all of which have proved to be counterproductive to economic growth. For those receiving net cash, the effective tax rate is negative, an idea originally proposed by Milton Friedman and modified by Charles Murray. For those paying taxes, effective tax rates progress smoothly from 0 to 25%. These cash payments should more than offset lost deductions for those in the middle class. Those with higher incomes will pay more taxes, but at lower marginal rates, and they will be the primary beneficiaries from higher economic growth. This new progressive flat tax should save the American people $500 billion annually. $250 billion will be saved in time and tax preparation fees by getting rid of individual tax filing. $100 billion will be saved by eliminating government means-tested workforce and reducing the size of the IRS. $150 billion of previously unpaid taxes will reduce this so-called tax gap. Investment taxes. All investment taxes should be abolished, including capital gains, dividend, gift, and estate taxes. We want to encourage investment that grows the economy. However, gains from derivatives, commodities, collectibles, short-term stock trading will be recategorized as business income, since they do little to encourage economic growth and in many ways are destructive. Let me explain why the phrase trickle-down economics has things completely backward. In the average company, wages are 4 to 5 times the amount of profits. Using our 25% flat tax rate, 60% of revenues go to net wages. 15 goes to net profits, and 25 goes for taxes. Of that 15% profits, more than two-thirds is reinvested in the company to support growth. Only 5% of revenues is actually distributed to owners in the form of dividends. So, who's getting the trickle? If owners receive 5%, while labor receives 60%, and the government receives 25%. Socialism does not work, but without capital from investment, capitalism will also fail. Job creation depends on an initial investment and reinvestment of profits. By taxing dividends or capital gains, the incentive to invest and thereby create and maintain jobs is reduced, as is the net tax revenue. In the example above, the taxes on dividends collect only 1% of company revenues. But if that tax lowers the projected net return and causes investors to refuse the initial investment, the eventual tax lost is 25% of company revenues, since the company never exists. Recognizing that reducing tax rates on the wealthy is a politically sensitive issue, I have developed a solution called the Painless Tax. One example of a painless tax is a winning lottery ticket. Would you be unhappy in paying the taxes on a winning ticket? Under my proposal, winning tickets won't go to everyone, but everyone will benefit. Along with showing you how to get these winning tickets, this proposal will create a budget surplus through a huge one-time painless tax on the rich. Yet, even they will like this tax. It will stimulate job creation and dramatically increase investment, and may even turn our economy around. And it will reduce future entitlement liabilities. Here's how it would work. When it's announced that the capital gains tax will go from the current 15% to 0, stock prices will rise as actual ownership increases from 85% to 100%. With a 15% tax, you only receive 85% of the proceeds. Stock prices should rise by approximately 17%. That's 100 over 85. It is difficult to estimate the actual increase because 50% of the stock is held in infrequently traded tax preference accounts. On the other hand, stock is frequently sold before the 15% long-term holding period is satisfied. Increasing stock value should occur prior to the implementation of the new tax rate. However, the day before that new tax rate is implemented, there will be a one-time capital gains tax of 15% applied on all accumulated capital gains. This will apply to all unsheltered holdings and non-Roth pension funds. Capital gains have traditionally been taxed only upon sale of the underlying asset. While this one-time tax hits the super rich the hardest, it also unlocks family holdings, creating future portfolio flexibility. Abolishing taxes on investment will avoid the incredible waste that regularly occurs for tax avoidance purposes. This is a painless tax for two reasons. First, the permanent rise in value of the stock should exceed the liability, the tax liability. Second, this tax will only be paid out of pocket for those with capital gains exceeding $2 million. Those of us with less than $2 million in gains, and mine are far less than that, will pay this tax through a reduction of future entitlement benefits, exactly equal to the individual tax liability. Tax revenues from this painless tax are expected to exceed $1.5 trillion, which exceeds our current budget deficit. While this is a tax on wealth and investment, it is in effect a ransom paid to release a flood of future job-creating investment. Taxing investment in this way is far more ethical than voiding commitments made already to the wealthy on Social Security and Medicare. Well, that's it. We've discussed why the practical implementation of a flat tax is superior to either a VAT or the FairTax. We've shown how to create a progressive tax through cash payments that get rid of means-testing bureaucracies. Finally, we've shown that taxes on investment are job killers. And we've shown how investment taxes can be abolished with a minimum of political fuss through a painless tax. If you missed the first two parts of Fixing Everything series on MHTV, they can be found on YouTube by searching my full name, Nedland Williams, or Fixing the Federal Government. Thanks for watching. See you next time.